The markets, especially the Dow, has given us very clear indication of which way they were moving. After a slow, steady uptrend, or at least a good, reasonable uptrend over the last couple months, we had a pullback. So the question becomes, how far is this pullback going to move? But once we started seeing the hammer signals, with stochastics starting to curl back up, then bullish confirmation back up above the T-line, it became evident that the uptrend was still in progress as long as they couldn't close it back below the T-line. Again, the T-line is a very high probability trend indicator, the 8 exponential moving average, which becomes very effective when in combination with candlestick analysis or candlestick signals. Stochastics coming up with the signals still heading higher, or the price still heading higher, gives a good probability that the Dow is going to at least test this level, which means there's at least 1 or 2 more days. And then at that point, we can see what type of signals occur to see whether we're in the next wave or whether they fizzled here at a double top. At the same time, the NASDAQ, after doing a bullish harami right here kind of on a double bottom, has been moving up nicely, and it did close at a recent high, with stochastics still heading up. So that's still also a good indication that we're in an uptrend and will remain in an uptrend as long as they don't close back below the T-line. This allows for a very simple identification of candlestick patterns. Notice that this uptrend in net T's started with a doji gap up after a series of dojis. Uptrend, now we've gapped up right to the recent highs with stochastics still having more upside, makes this very simple. This flat handle and this scoop is a scoop pattern, which tells us if they open this positive tomorrow, this slingshot effect coming out of the scoop will be a good extensive uptrend. That same pattern has been in existence in our recommendation of ROVI, R-O-V-I, where we had a flat handle. Then you had a little left-right combination, a doji sandwich. Doji sandwich is an indicator where you have a bullish day, a doji, and the simple rule of a doji is that they're going to move it in the direction of how they open it after a doji. In this case, with a doji right on the T-line, if they open it positive, that means they're trading positive, which means the T-line's not acting as resistance. If that's the case, it starts forming this little scoop, and we know the results of a scoop pattern. It's going to have a good slingshot effect to the upside. This is not rocket science. This is just common sense, applying what the Japanese rice traders have identified as reoccurring investor sentiment that allows us to take advantage of what is going on between the bulls and the bears at the appropriate time. That'll be it. We'll see you in the chat rooms.